Yeah, we are quite pleased with solid performance in the first half. 2% volume, 6% revenue, 12.5% operating profit, so good operating leverage. And to your question on volumes, 2% volume growth globally, balanced and broad-based across our global footprint. Importantly, also good quality of that growth. 5% increase in our premium volumes, even 9% in brand Heineken, our most important brand. And our 0.0 portfolio, which is becoming more and more important, up 10%, and Heineken 0.0 even up 14%. And again, we see those results, broad-based across the globe. We're with some of our key markets bouncing back to growth, like Nigeria and Vietnam.
Yeah, one of the things then comes about with your business also that growing input cost base. As inflation begins to moderate, what is the impact then that you're feeling and therefore on pricing?
Yeah, after last year, where the industry had to take a lot of pricing to absorb the input cost inflation, this year we see a much more benign input cost development. Still up in the low single digit, but that's particularly driven by our Africa footprint due to devaluations. But in the key markets in Europe and the Americas, input cost much more modest than last year, allowing us to take much less pricing. And that's very important to rebalance our revenue growth to both volume and pricing growth. And very pleased to see, for example, across Europe at the half-year mark, volumes and pricing slightly up. And in key markets like Brazil and Mexico, the same.
Then that 2% then, is that enough to kind of achieve the growth levels that you're looking for, that 2% volume growth that you anticipate to happen globally, especially when you have an environment in which consumers are perhaps finding it tough to continue to drink, be out the way they perhaps used to, perhaps a little bit more thought, and especially then with the concept of premiumization that is still in play in this market?
Yeah, 2% volume growth is something that we're quite pleased with. Again, 2% volume, 6% revenue. That's something that we would love to see going forward. And we're really making the investments to do so. We also announced in our press release a material step up in our marketing and selling investments in the second half of the year. And we believe it will be a combination of making sure that we keep our pricing modest as we can, given the input cost outlook, but also really making sure that we're making the investments. You see that on brand Heineken, that has benefited from significant and consistent investments over the year and is consistently outgrowing the industry and our overall portfolio. And we'd like to see that on many more brands across our portfolio. We see good momentum on brands like Moretti and Desperados, but it will take concerted and consistent investment levels.
Hey Dolf, always lovely to speak to you, my friend. What went wrong with sport and alcohol over the summer so far?
Yeah, I think, there was a lot of engagement. I think we all loved the Euro Cup, but sadly the weather impact cancelled that out. Our beer volumes in Europe leading up to May were very solid. June was much less than we expected it to be. That was predominantly in the northwest of Europe. Central Eastern Europe actually much more healthy and less impacted by it. We saw that go into July. We had expected some upside because of sports and the cycle that didn't materialize. But hopefully in the second half that kind of starts to balance out again.